Hey, we're live. It's March 14th. This is Deribit Live. You're with the Rogue Traders, and we've got a lot to talk about, a lot to do. The market's doing all kinds of crazy stuff. But you know what? You have to be very, very careful trading, especially tomorrow. Do you know why, Richard? Do you know why tomorrow is going to be an especially difficult day for trading?
Seriously, or is this a joke? One of your horrible jokes?
I'm insulted. I'm insulted. March 15th. Beware.
Ides of March, is it?
Beware the Ides of March.
Oh, okay.
Yes. Sorry, all the millennials are like, what the hell is he talking about? Anyways, hey, great to see everyone. We got Core, great, Giandrea. Cool. I can see, and just before we started, maybe 15, 20 minutes ago, market started to move. It's really, really relevant actually for the technical analysis piece that I want to share with everyone. And we did have some comments, Richard. And you know what? There's two things I want to mention. Number one, we're changing the format a little bit. We're doing a lot more live trading, and we're going to get into that a bit more. Exciting stuff, especially going on with Deribit that we're able to do with them and to share with you guys. But if there's anything you want us to cover, if there's educational topics, if there's anything in the platform itself that you're not understanding, you want to use or whatever you want us to demo, let us know. And we'll work that in. Because right now we're just kind of doing our own thing, basically what we do all day, every day. And we're just kind of, you guys are just along for the ride practically. So if there's anything in particular, please let us know. Secondly, Richard, someone said that they have a hard time hearing you because of your accent and the way you talk, and you mumble a little bit. So
yeah.
In the UK, if they would only teach people to speak proper English, this wouldn't be a problem.
I'm a naturally shy person and don't like to hear my own voice, so I'm going to have to overcome that and project like a thespian on stage. So I'll work on that. Yeah.
Excellent. Okay. All right. But anyways, thank you for the feedback. It's always positive, even if you've got something you want to say, complain, or to help us out. We're going to take it as positive, constructive criticism. All right. So let me just rock and roll. And I'll just mention too, before we get started, any questions, please put them in the Q&A section of the chat. We are going to have a little Q&A at the end. We'll be about 30 minutes in total. So let me bring up, we've got the slides here.
I was going to say, yeah, come on, get on with it. We've got these negative risk reversals. We need to trade them.
All right. Fine. Stop pushing me. What are we doing today? Current market analysis. We're going to do some live trading. It's going to be good fun in the account that we set up specifically for you guys, and we'll review that again just before we start trading. And check this out. And Richard's going to share a little bit more of those details with you. And he's giddy like a schoolgirl about it. 48,000% annualized returns on the synthetic miner account. That's the account we started with you guys 2 weeks ago, exactly 2 weeks ago. 48,000% annualized returns. Now, there's a little bit of tongue-in-cheek caveat there, and we're gonna go through that, but it'll be good fun. Linear options announcement. Deribit's coming out, has linear options now, and we're actually going to allocate a little bit of funds into this account that we have. So we're going to do trading in this synthetic miner account. You're thinking, what the hell is a synthetic miner account, Shane? Well, we're going to get into that too. That's what this account, and I'll give all kudos to Richard on this. Despite his lack of clarity and his lack of command of the English language, he came up with this term, which is brilliant, I think. So every now and then he has a really, really good idea. But we're going to talk a little bit about that and why we call it that. But we're going to start trading linear options as well, which will be fun because we've got a lot of the degen stuff like the Matic and all that stuff. So we're going to have a little bit of fun over there, and then a Q&A. So let me shut this down, and I'm going to jump right over to what am I jumping to? The charts. Let me show you my charts. Bring up charts here. I assume everyone can see that. Richard, you can see that?
I can see that.
All right. Okay. Here we got ETH. Now, what I did is all I'm doing here, we're not doing this in the technical analysis show. This is just let's take a very basic look at some basic chart patterns and trend lines and support and resistance areas. That's all we've been doing for the last year, right? So here's ETH. Got this pretty smooth line going up. ETH can pull back easily. Can pull back more, let's say 3.5% more. and still be right at the trend line. Things will always break the trend line a bit. Why couldn't it go down 4 or 5, 6% total from here? And it wouldn't be anything unusual. We'd just be coming back to the trend line. People are freaking out. Oh my God, it's coming out. Like, you know what? It's nothing for crypto. It's nothing.
Yeah.
Let me carry this point further.
5% in a day is a day in the life, right?
That's right. And we get 10% moves on average every 90 days. So, sorry, Richard, you were telling me last week, 3 days ago, we had that little wick down in Bitcoin, which was a 4.5% move. And how much in liquidations was there?
$360 million.
From a 4.5% move. What is it, your first day in crypto? Like you're over leveraged.
People must be squeezing it tight and just trying to chase it up too fast. Yeah. I mean, you don't get rich quickly in trading. You get rich slowly by taking less risk.
Yeah, and there's that old expression: how do you make a small fortune on Wall Street? Well, you start with a large fortune, right?
Yeah, quite.
Okay, so quickly, let's just jump over to the Bitcoin chart. Now, this is where it gets a little bit interesting. It's got a little bit different chart, right? Here we get the trend line, and it's well underneath the trend. It's well underneath the current price. Bitcoin, it's just clinging to the trend. Again, I just do a basic little thing, and I drew it up here. We could move this a little bit this way or that way. Whatever. It's just a basic line. It's a general idea, 10,000-foot overview. So if we're talking about technical analysis, we could call this an ascending wedge, couldn't we? It's a pretty obvious ascending wedge. Now, I saw an article this morning. Actually, I think Richard,
remind me, Shane. Do ascending wedges give you ascending wedgies?
I have no comment. Only if I use brown lines here. Anyways, boy, we're on fire today. Okay. Ascending wedge pattern. Now, Richard actually sent me an article. I don't know where he found it this morning that talked about this ascending wedge. So I'm like, oh, okay, that's cool. But the problem with that article is it said it's a bearish pattern. It's not true. 60% of the time it is, but the other 40% of the time it isn't. But I will tell you what an ascending wedge or a rising wedge, or sometimes they call it a rising bear wedge, will do is 80% of the time it will result in a price movement up or down, and then we get into the reading the burnt animal entrails section where they take the apex of the distance and they multiply it to get the probable move and all that stuff. Let's forget all that stuff. 80% of the time, when it comes to the point, it's going to move one way or the other. Now, 60% of the time it goes down. So it's more likely to go down than up, but not by a lot. Not by a lot. Here's the thing. While we are prepared for a massive move down, could this thing come back down here in the mid-60s or even scare the bejesus out of everybody and go down into the 50s or something crazy? Well, sure, it's crypto. Anything can happen. I don't know. It's going to hurt, and we'll have to adjust some things. It might take us a few weeks or a month or two to recover, but it could happen. But this isn't a stock. This isn't Microsoft. This isn't the S&P. Every single day, we know that demand outstrips supply. So does these technical indicators really apply like you would apply them in the stock market? I'm going to say in this case, not really. Not really. I think it's a good general thing to be aware of. But in crypto, at this stage of its life cycle, we have to be prepared for anything. We have to be prepared for a 20% move in either direction to its sweet. And I mean fast. That's why we're always...
Yeah, I think it's worth adding that Michael Saylor, and in Saylor we currently trust, borrowed $600 million to buy Bitcoin at 68,000. And he's just about to go and borrow another 500 million, I just read today. Mm-hmm. He's selling loan notes against the stock in MicroStrategy. Now, this might be one of the biggest, wealth acquisition exercises in history, with a major rug pull behind it. But or it may be because he and his investors absolutely believe. Either way, there's going to be a bunch of buying going on from him. Mm-hmm. And of course, at the moment, we're seeing massive buying from the ETFs. Yesterday, the day before yesterday, was net $1 billion. in. So yeah, and what the only thing that the only thing I'm actually caring about right now is monitoring that ETF flow number, because if Wall Street gets a shock and if Wall Street investors get jittery, and then they dump the riskiest assets that they've got in their portfolios, and that's going to be the Bitcoin one, then now that they own whatever it is, 2% of Bitcoin, that would have an epic effect on supply.
Yeah.
I think that's the only thing that we really care about anymore. So I think, and I'm going to cover this in an interview, one of my Olga interviews for Rogue Traders. But the difference between Michael Saylor's influence on the market and BlackRock's is that MicroStrategy and Saylor bring price stability to Bitcoin, and the ETFs bring utter violent volatility to Bitcoin, which will only get worse.
I think that's a good point. And we have to ask ourselves right now, we know that demand is outstripping supply. We have to ask ourselves, for the people expecting a correction, and I don't think there's a lot out there, but you got to be aware, and we have to be protected. Where's the selling pressure coming from? Again, Richard talking about, there could be, what if interest rates change? What if there are situations where there could be a glut of supply come into the market, but right now that's not there. Right now that's not there. And we think that Bitcoin is going to appreciate in value until it hits that point of saturation, like probably this, nothing I think I'm saying right now is groundbreaking. And at that time, it's going to be a sell. And it's going to be a hard sell. We were talking the other day with some people, and I said theoretically, let's say it goes up to 150 or 300K or whatever it goes to. Maybe it only goes as high as 85. Maybe that's as high as it ever goes. I don't know. When that saturation point comes, there's going to be one mother of a down candle, of a down reversal. I'm talking 20, 30, 40, 50% correction. I think. No, I could be wrong. But that's what we're going to prepare for.
It's going to utterly wipe out half the community. Yeah.
Well, you have to think about it. If you're an investor right now and you want to put your money into a Bitcoin or an Ethereum ETF, what's the incentive? Well, price appreciation. You expect this thing to grow in price. Yeah, right on. Get on board. But at what point, when it stops going up, what's the benefit of owning it? Unless it holds its price stability and it becomes more like, like fiat currency or something.
I think
it doesn't give a dividend. Like there's no reason. It doesn't produce any value after that.
I think that the Michael Saylor would tell you that it's there to act like digital gold, and it will appreciate in value by the rate of money printing. But I think that's a fair point. But it will appreciate in value by the rate of money printing with massive volatility on top, which will wipe people out because they're going to get greedy and get leverage and so on.
And I think at that point, there's other instruments that investors would rather be in.
Yeah,
there's many people who would think that. Yeah,
my position particularly is, if Bitcoin gets to 300K, I'm definitely, folding out of 3/4 of the Bitcoin straight into gold. That's my personal thesis, right?
And it'll be interesting for us in 1, 2, 3, 4, 5 years to look back and say, okay, what did Michael Saylor do with this?
Yeah,
maybe he'll have dumped almost all of it in 3 years. I don't know. He wrote it up and made millions. I don't know. But the point is we have to be aware we're still in an uptrend. So let's segue over to the account, because what we have with this account is we're trading it very lightly, but we're doing a very specific action. And as I said, Richard has coined the term synthetic miner. Our objective here is to beat the miners. So instead of going out there and buying mining rigs and paying for electricity and doing all that stuff and all those headaches, we're going to see if we can outperform people who produce Bitcoins just by using options. That's our entire goal, is to beat the miners. And we're not going to use a ton of margin doing so. Could we be more aggressive? Yes, but we're not going to. We're going to show that anyone can do this. We start with a $5,000 account. So it's nothing that, you don't have to have $1 million to start or anything. And I think this is going to be a really interesting exercise, because we think we're going to be in a continued uptrend for a while in Bitcoin. Now, when we feel Bitcoin is starting to get a bit top heavy, we'll change that strategy. Are we going to have drawbacks? Well, sure we are. I mean, it's an asset, of course. That there's going to be drawbacks, and we'll have to deal with that. But I think for the most part, we're kind of dedicated to this long strategy of constant price appreciation for the next foreseeable future, whether that's 6 months, whether it's a year, whether it's a year and a half. We're going to see how many Bitcoins we can generate during that period of time. Richard, if you want to share the account.
We just screen share it.
Yeah, no problem. And then what we've done too is we've put together a spreadsheet. So we have another account, a small one we trade for our members. We can check it out at roguetrader.academy, or if you go to patreon.com/Rogue Trader Academy, we live stream every day and we sit and we trade these accounts. So we spend 20, 30 minutes, whatever. We discuss what we want to do. We take a look at all the metrics and we execute trades. So you can follow along with both accounts there. All right, so go ahead, Richard, and because I think we're thinking about buying a risk reversal, especially now that we have a bit of weakness in the market.
So the long and short of it is that we want to mine Bitcoins, and we want to mine more Bitcoins than a Bitcoin miner is going to mine, and we want to do it at lower cost. So our investment was $5,000 or $5,000 worth of Bitcoin, which was 0.0825 at the time, Bitcoins. And
Richard, can you make your screen a bit bigger? Would you mind?
Sure. Whereas I think an ant miner costs about 20 grand, I think, at the moment.
Mm-hmm. Yeah.
And I think if you get a really good deal on electricity, I'm just being told to slow down by Olga. If you get a really good deal on electricity, such as if you're friendly with some Saudi royal family, then you'll get payback on your mining machine in about 9 months. And then after then, provided that difficulty hasn't gone up too much, halving hasn't affected you too much, tech hasn't overtaken you, and you're being outcompeted on hash rate, then you'll start to generate. I think it's a break even in 9 months, and then you start to make money. So, but we figured actually with options we can do way better than that, particularly when volatility is reasonably elevated as it is now. So we figured we could actually just get, say, 50% a year appreciation on Bitcoin just by selling put spreads in any market where the vol's above 60. And if the market goes up, happy days, we just take profit on that spread. And if the market goes down, well, then we just roll the spread and maintain the intrinsic value of the account until the market stops going down. As long as you're doing that carefully and not trying to be too greedy. So the aim, like I say, is 10 basis points a day, which annualizes to about 50% a year if you do that every day. But actually, what you find is, and I think we've covered this before, what you find is you get situations where you're actually able to go into an expiry and extract multiple bytes of the 10 basis points per day. So if I, for example, this 15th of March strike, we actually sold 0.2 Bitcoins of a put spread, and then we bought back the short leg of that and sold another 0.2 put spread. That's being short the higher strike and long the lower strike. And then we bought that short leg back, and then we sold another put spread. So we've actually been into this expiry 5 times during the rally. And so in the time allotted for us to extract 10 basis points per day, we've actually extracted 50 basis points per day, half a percent per day of our net asset value. So I think minus some trading costs, but let's call it 40 basis points a day. So we've actually outperformed our strategy on this particular week by 4x. So that's great. We just bank that and move on. And there'll be weeks where there'll be a series of 3 weeks where we bank nothing, but when we're just rolling and rolling and rolling. But overall, whenever we get a ratchet up, we take it. So by doing that, we're actually hoping, even though we're aiming for 50% per year return, we might actually get 100% a year return, as long as we're super careful. And we think that mining, whatever happens to the price of Bitcoin, doubling your Bitcoin stash every year on a fairly low risk trade, it's got to be a no-brainer, right? And you can do that right here on Deribit with almost no thought super easy, low risk in derivative terms, way less risk than going and buying a mining rig and maintaining it and all that nonsense, right?
And at no point so far has our margin ever gone above about 25%, maybe 23%.
If that 20, yeah. I think we're aiming to keep it below 20%.
Yeah. And actually, just before this call, we thought, oh, man, right now is the perfect time to do it because the market was diving. It's recovered a little bit, so it won't be as good because we want to, I think on the 17th, we have an open slot there. I think we wanted to put on a
quick look.
Buy risk reversal.
So a quick look at the riskies. Yeah, we've got negative risk reversals out until the 17th and also on the 29th. So we could do put spread with a call kicker if you want.
Yeah, let's do it. It's too bad the market's recovered so much already. It's but you know what? What can we do? But I just took a quick look at the volatility surface, and it still has a little bit of skew to the downside on the short dated. So I think the 17th is probably still a good bet.
You want to do a 17th? Okay.
Yeah.
All right. Let me send Deribit live.
So, and I'll just mention too that sometimes we're just selling the put spreads. But a lot of times it will double up. Go ahead, Richard.
Yeah. So here's our calculation. Right. We want to achieve 10 basis points a day, and there's 3 days until 17th expiry. Call it 3 days. It's 2.5 days, but call it 3 days. So we want to achieve 30 basis points of premium from selling a spread, right?
Yeah.
So we could do that by selling the say 70k and buying the 68. That would give us 40 basis points, and then we could use the 10 basis points to go and buy a call way up here at say 81.
81, 82, yeah,
or 82. And so what that does is it means that we're achieving our 10 basis points of premium, provided the market doesn't go below our short leg. But if it does, we can roll it. Don't worry, we'll deal with that. And we're super happy to sell short dated because we know we can always roll out to longer dated when the squeeze comes. And in fact, I think given that the entire world is buying Bitcoin right now, even if we sold the 70k puts and got caught with the market below 70k for the next 3 months, I think I'd be happy just to roll 70k calls all month long, 3 months long, pick up the premium, and then wait for the market to recover. I think I'd be perfectly happy with that on this account, and that would actually generate us a lot of income. So we could do this. Should we do this? 18?
Yeah. Let's do it right now because we're running out of time. We still want to cover the spreadsheet. Yeah,
we're just going to do 0.1. The account value is roughly 0.1. So we're just going to sell 0.1. So we're just selling 1x of the net asset value, and we'll buy the 67s. Buy when there's more liquidity in the combo market, the strategy markets. We'll do it in those. And then you want to buy the 82s. Yeah, we'll buy the kicker.
Yeah, sure.
Yeah.
They're on a little bit of a sale right now, so.
Okay, and then we just got to either wait for these to get filled, or we just need to push it and get got filled on the calls, got filled on the puts, and now we'll just push our cover in and get it done. 31. Oh, come on. Someone's watching us and moving the price.
Yeah. Someone's pulling the bid away. Like, we're going to screw them on air.
Screw you guys. I'm going to cross the spread. Right. Okay. Okay. So we sold a put spread here, 70,000, 67,000. So maximum risk on this is $300 worth of Bitcoin. So we're selling. We sold at was it 90, 85, 90? I forget now. Paid 30-ish. So we've got about 57-ish basis points, and we spent 10 basis points on the 82,000. So if the market goes sideways or drifts down, we're going to pick up our 30 basis points or 10 basis points a day of net asset value. Happy days. And if the market goes blasting up because Sailor gets his loan and goes piling into the market and crosses the spread, then we get a massive win. I mean, normally this 10 basis points is wasted, but I'm in the current market. I am more than happy to waste that because one day we are going to wake up and there's going to be a 50% up candle, and we're all going to be super glad that we did that.
And I will say we don't always buy a call with that extra. A lot of times on the second iteration on the same expiry. So when Richard showed you that shrapnel, all the long puts that were left over because we kept going in and buying it back and repeating. A lot of times the second, third iteration, we'll use that to buy some calls just in case we get one of those God candles.
Yeah. So this stuff here is the shrapnel from previous puts, and notice that in fact previously we were selling 0.2 of so we were doubling up, and I actually, particularly when vol is high, I'd much rather double up on a very short dated strike expiry than placing them out over the coming weeks. But we do have a few in place. We've got one there at on the 22nd. We've got one here on the 29th. Yeah, but that's a long way away. That's almost actually getting to the point of being bought back. And of course the new expiry is opened up, but there's no need to play. Vols are high enough. We can play at 1 and 2 weeks maximum.
So here we are. We've got this little account, $5,000 account. Nothing special. It's an average retail size account, and we've been trading it for 2 weeks. Richard, would you mind bringing up the spreadsheet you created? And Richard has also promised me, he's such a good guy, that we're going to make it pretty. So nobody wants to look at boring spreadsheets, right? I don't. So we're going to do our best by next week to kind of make it pretty, maybe a graphical representation. But this is very interesting. 14 days exactly we've had this account, right? Okay, let's compare.
We took this mark on. We took this mark yesterday, actually.
Yes.
And I, rather than bore everybody by doing all the manual marking, I need to build a script for this. But we'll just take yesterday's numbers. So we started this account on the 29th of February. You guys will remember that because you were with us. And we started it with 0.0825 Bitcoin equity, which at the time was worth $5,202. And as of yesterday, the equity is 0.0883, so that's a 0.058 increase. And of course, the USD equity value is 6,482. So that's in terms of Bitcoin return, 7% over 13 days, which is well ahead of schedule. In terms of USD return, 24.6% over 7 days. Now, if we were a hedge fund, we would literally pack up and go home. Now we'd go on holiday. And tell our investors at the end of the year that we paid them 24%. Right? We'd just be partying for the rest of the year. Happy days. We win. So if you were hodling, you would have obviously accrued no Bitcoin in that time because you were just hodling. And if you were just hodling in Bitcoin but checking in USD value, you would have increased your value by 16.37. So we've outperformed in USD terms. We've outperformed hodling by 8% difference. And if you annualize those returns, then our Bitcoin return annualized. So you take your per day increase and you compound it over the period. That we would actually increase our Bitcoin by 582% per year, which would be turning that 0.08 Bitcoins into 0.4 of a Bitcoin. And in terms of US dollars, if we compounded those returns and Bitcoin carried on going up in a compound fashion at the same rate, which is a big if, we would actually make 48,000% in dollar terms. I know that's a stretch, right? It's only a 13-day sample. It's an exceptional time, etc., etc. However, we thought it was a fun headline number to show you. And then if you were to USD, if you are hodling over the year and Bitcoin carries on its current trajectory, then you will end up with a 459% return. So we actually outperform hodling by 100x, assuming the market carries on as it has been, and future performance doesn't necessarily reflect past performance, etc. But you'll be with us on this journey, and we'll see how close we get to this 48,000%.
Yeah, and of course nobody knows. Like so many people out there are saying, "Oh, Bitcoin 300K by the end of the year." Maybe, I don't know.
If it is this, then that trajectory will make us so much money because vol will be high. We'll be selling puts 5 times a week into that. We'll end up with, like, I don't know, yeah, this account will be worth $300,000 if it does that.
That'd be a lot of fun. That'd be a lot of fun. All right. Hey, why don't we
from a $5,000 investment?
let's hope that works out. All right. So without further ado, let's just tackle a few questions we have because we're pretty much at the end of our time here. And if you have any questions about this strategy, what we're going to do if conditions change, all the type of things, just go ahead and ask us. There's no question is out of bounds. Question from Andre. Recently noticed with sold puts that while the underlying asset moved up, so did the put price. Okay? In calls, it seems to move in a different way. Is this normal with puts? There is less connection with the movement of underlying. Great question.
Very simple. Yeah, look, you're trading Bitcoin. In Bitcoin, Vega dominates everything. The vol of vol. It is absolutely everything. Let me share my screen. Go to the devols. Oops. The Deribit engineers. That graph is volatility. That's the 1 month average volatility. That has gone from 31 to 62 down to 49 to 73, straight back down to 41, up to 85. That is that's dominating the price of any option you write or buy, irrespective of market movements. It's almost irrelevant what spot price does. When vol moves are this big, that's what dominates your options price, and particularly on longer dated options. Anything out over 2 weeks, you are absolutely dominated by Vega. So you need to be if you're selling options and vol's down here, you scale in really, really gently. We scaled in gently, but not gently enough, and we're still fighting the result of that in some of our private accounts. And when it's up here, you can scale in a little less gently. But bear in mind, vol can spike up to 140. So and then even if you've sold far out of the money puts and you think that and the market doubles and you think your puts will be worthless, no, they'll be worth 3 times what you sold them for for a day or two. Right?
But never forget, as it comes to expiry, all that comes flooding back in. That's why we love selling short-term stuff right now in crypto.
Yeah.
A question from Vladimir. He says, well, if you want to hear feedback, what to do with perpetual position, which was used to hedge options after options expiry and futures still.
Oh my God, I can answer that so easily. Right, look at perpetual futures. Funding costs right now is 0. 2 days ago, the funding costs was 15 basis points per 8 hours. Yep, if you're holding a residual perpetual position and you want to hold on to that delta, for goodness sake, sell your perpetual and buy a December future. You'll be paying 18% funding, but that's 18% fixed cost at least. Now you know, and now you can sell calls against that future. You can sell at the money calls and roll them, and or you can sell 30 delta calls or 40 delta calls against that future, and just pull in massive premium all day long, whatever you want to do. Or you could just accept the loss on the futures. But right now, I think if I was holding futures, I'd keep them, but I would not hold perpetuals. Honestly, if you hold perpetuals in a crypto bull market, the funding costs are going to get to the point where you are going to be wiped out. Even though you're long the market, you're going to get wiped out in 6 months because the funding costs will steal all your capital. Yep. So for goodness sake, if you're going to hold long term, convert to dated futures, please.
All right. Another question from Vladimir. Your idea is to mine more than miners using options. So my question is, what if Deribit faces a repeated FTX event so you have the risk of losing your entire bankroll?
Oh, well, FTX has an answer. Sorry, not FTX. Deribit has an answer for that. So you can... they have the ability for you to do custody. I think at the moment they're integrated with Copper Clearloop custody platform, but they're also onboarding others. There are people like Komainu and Zodia and Fidelity and a few others. And you can actually lodge your Bitcoin with a custodian and then enter into a tri-party agreement between the custodian, Deribit, and yourself, where your capital remains with the custodian. Essentially, Deribit lends you the money to act as margin, but they have a call on your capital with the custodian if you don't pay your margin bills, and so your capital stays with the custodian. And this is what I'm going to do when I finally get my fund started. So because the custodians are registered with regulators, some of them are regulated. I'm also actually speaking to Sygnum Bank about custody. I don't think they've got an agreement with Deribit yet, but in the end, all these people will. And so the way this is all going to go is that if you've got more than like $5 million worth of Bitcoin, which is going to be all of us soon, right? Then you'd put it in custody, and you'd pay 20 basis points a year for that custody service, and then your Bitcoin is protected. And even if they were hacked and that Bitcoin was stolen, then you would at least get cash payment from their insurers to the value, so you could replace it. So they'll make you whole.
Yeah.
So yeah, that's how all that works.
And Deribit has some pretty competent management. They're quite experienced.
Deribit are by far the most competent and pleasant of all of the people in crypto. I think, yeah.
Yep.
And I'm not saying that just because we're doing a broadcast for them. I'm doing a broadcast for them because I think that.
100%. Question from Peter on the put spreads being systematic. Which deltas to choose? 10/20. I don't think we don't do it systematically. We're just looking to make that per day basis points.
So we basically take the number of days to expiry and say, okay, multiply that by 10. And that's the number of basis points of Bitcoin we've got to pick up in that spread. So we'll put the option spread. I'm showing you the wrong account, but it doesn't matter.
Yeah, because if we're looking at the 17th versus if we're doing this right now on the 29th, it's going to be a significantly different delta to pick up.
Yeah. Okay, so 29th, we've got that's how many days to run? 15 days to run. So on the 29th, we'd be looking for a spread that was going to pay us 150 basis points. So we might go in and say maybe sell the 66. That's 214. So we can spend 60 on the cover. So we'd cover it with 58s, and then we'd pick up 150 basis points of premium, and then we'd sit and manage that position. That's pretty much the sum total of systematic trading we're doing on this account. And sometimes, simple is best. He says while showing them an account that's in a total degenerate account, but that you have to. I'll take this off because you have to actually pay us to watch us trade this one.
Yeah. Okay. Great stuff. And again, we wanted to keep this really simple. We only have a half hour each week with you guys, and there's lots to cover. So we didn't want to have this elaborate strategy. This is something anyone can do. Anyone can do this. Okay, last question here from Gene. If vols stay at the same level, but price is slowly grinding, wouldn't it be better to resume to selling calls, less margin required, and skews still being elevated? It feels collecting very small from selling put spreads right now.
That's another possibility. I would say that if I was going to sell calls in this market, actually any market, I would probably want to hedge the delta. So first of all, I'd sell call spreads for sure, and secondly, I would want to hedge the delta with being long futures. So it's in effect, I'm actually selling in the money puts. Now, yes, there generally is more premium in calls than puts on Bitcoin because the skew is generally positive. Even in bear markets, oddly, because Bitcoin people are generally optimistic. And that's definitely a strategy. And in fact, that's part of a core strategy I run for managed accounts in hedge funds. But it takes a lot more work because you need to hedge daily or have an auto hedger or something. And you've got to then choose whether you're going to hedge with the futures or the perp. And you're going to have to manage all the wicks and all that. And it's a mess. To be honest, I'm happy to be the wrong side of the skew, be the wrong side of the carry, sell the puts and just not worry about it. Because it's just less work and makes just as much money. But I mean, not maybe 10% less, but who cares, right?
And I will mention that we do things like that in the other accounts. So if you follow us on Patreon for our daily live streams, which is Rogue Trader Academy, you're going to see when we choose to sell calls, even in a bull market, because we like it. And you're right, the skew's there. You get some big dough for it. So it's funny because even on this pullback, and I can see Bitcoin's come back down a little bit. You'd think that, hey, by March 29, calls are probably being bought back. Well, you know what? Their value hasn't decreased that much. That skew is still there in the long term. We've got some short-term skew on the put side. Okay, let's see here. Gene says, thank you for the answer. You're very welcome. Vladimir, guys, you are gold. All this stuff is pure money printing machine.
Well, then
Dang, that's what we're
that's
trying
damn
to
right,
do.
Vladimir. So get onto our Patreon and sign up and pay us some money.
That's right. Damn it. Yeah, okay. It's fantastic. Let me just see. I don't think we have any more questions. That's it. And we've gone a little bit over time, but I think we've got everything covered. Again, anything you guys want to see, feel free to send us some feedback, and we'll cover that next week. We're going to be, I think we're going to be jumping into linear options. Good stuff. I can see Bitcoin pressing down.
Yeah.
Finally, I wonder if we're going to head a little bit lower, and if that ascending wedge pattern we talked about is going to come to fruition. But
no, it always does this. They drive the price down by selling futures before the US Open, and then they scare everybody off, and then
the
comes in
ETF
and buys the entire market. Yeah. I don't believe it for a minute.
Fantastic. Oh, Vladimir, I'm sorry to hear you lost stuff in FTX. That's a tough one.
Oh yeah, you can reclaim that. There's a transaction suit. You can that you'll have received an email which you can respond to and do KYC, and they'll get you about 60 cents on the dollar, or maybe more, because the assets have gone up in price.
Yeah.
So you should definitely look into that.
I'm sure he has, but if you haven't, absolutely do it, and best of luck, Vladimir. Okay, that's it for today. Of course, join us at roguetrader.academy, or of course Patreon, Rogue Trader Academy there to follow our daily live streams. If not, we will see you next Thursday.